Intangible asset. Okay, now what is intangible asset? Intangible asset are non-monetary asset and without physical substance. Now, monetary asset we have like cash, bank deposit, or trade receivable. And non-monetary asset is like property, plant, equipment, intangible asset, and inventory. So when we say it's an intangible asset, this asset must be controlled by the entity and you expect to have future economic benefit to inflow into the company. Now, we can only recognize, means record in the account for this asset if you can expect there is a probable future economic benefit, means more than 50%, and cost of the asset means that the cost of the intangible asset can be measured reliably. Then you can recognize the asset. Okay, now based on the video that you watched just now, then you should know we have an asset that is a tangible asset, and also there are asset that is intangible asset. Basically, intangible asset means that you cannot touch it. Okay, you will know it, but you cannot touch it. You can see it maybe, but you cannot really touch that things. Okay, so here this is the LO, and then look at this intangible asset. This is following your IAS 38 according to the accounting standards. So intangible asset, we consider this is a identifiables non-monetary asset. Basically means that this asset, you can identify it. You know this thing, okay? You know this thing, but it's not a monetary asset. Means not your cash, not your debtors asset, and it's without a physical substance. Means you cannot really touch it. So here are two criteria if you want to say this is your asset. First, you can control it due to past event. Past event means, for example, you buy it or you create it. Second, if you want to consider this thing, if you created something and if you want to consider this as your asset, you must expect to have future economic inflow. Means that this thing can generate income for your company. Okay. Now here, this is the example for the star. Intangible asset on the company. You have goodwill, radio license, TV right, programs, software, films right. Okay, so let's say this a watch. Okay, what kind of asset they have is not only this physical watch, it's also including the copyright, patent rights. Okay, ultimate model, utility model rights, copyrights. Okay, design right. All this is considered as a intangible asset for the company. Okay, now this is a characteristic. Intangible asset is basically without a physical substance. So this is the examples, and then here you also have this, like novels, the books, the song, music, any software also. So trademarks, the brand name of a company. So since this is an asset, it's a fixed asset. Okay, then you also charge depreciation. But for intangible asset, when you charge depreciation, you don't call it depreciation, you call it amortizations. But the way you calculate it exactly the same as how you calculate the depreciations. So here, if you look at this depreciations, okay, you will use it cost of your intangible asset minus the residual value divided by useful years. Okay, it's the same method as how you calculate your depreciations. So look at this example. How should you do it? 170,000 is your cost. Okay, and useful life, do you have salvage value? Is no, so it's 0. Useful life is 5 years. So the depreciations will be 34,000 per year. Okay, so now how are we going to record the double entry? Okay, first is when you buy, you record the patent and the cash if you pay by cash. Second is record the double entry on the depreciations, or we call it accumulated depreciations, or you call it amortizations. Okay, debit amortizations, credit accumulated amortizations. Just like you debit depreciations, credit accumulated depreciations. Okay, so there's the first part. Now we're looking at this research and development cost. This is also your intangible asset. Okay, but only thing is you need to know if this is a research cost, we consider as expenses. But if this is development cost, we consider as your intangible asset. Now, how are we going to differentiate? Because most of the company research and development is together. Okay, R&D is together. But how are we going to differentiate? Now, first thing, we need to know what is the cost incurred in your R&D. First, your salary for your staff in the researcher. Second, the material that you use in your research. Then the depreciations that you use in your research for the asset, overhead costs, and other costs, for example, amortization costs or license. So, now what is the difference between a research and a development cost? Basically, research cost we consider as any cost that is to investigate, means in a very initial stage. When you try to get new knowledge, that stage, the very initial stage, then we consider it's a research cost. So, the idea is this: when you try to look for a product, or when you try to get into a certain area, but you are not sure, uncertain, you are not sure about what will become in the end, at the end. Okay, so in this case, we consider as a research cost. So research cost, idea, this is expenses. Okay, but then when you look at here, next is development cost. Development cost, we say, is applications of your research finding. Means that after you go through the very initial stage, now you have some idea and you know what is going on in this area. Then you're trying to apply your knowledge in this area into a productions or improvement of your current product. So we consider it's applications. And these applications will come out with a commencement of production or use. Means that when you apply this knowledge into your current product or into a new product, you are getting ready for this thing to produce, to commercialize, or to sell it for your company to generate income. Then this cost that you incurred, we consider as a development cost. So if this is a development cost, we consider as intangible asset. Okay, so next. How do you recognize, is this a development cost or not? How do you recognize? So first you have to look at this criteria here. The criteria, pirates. First, do you have probable future economic? Means can you generate income in the future? Second, is your company has the intentions to complete this asset? Okay. Third, do you have enough resources or not? You want to finish this project, but do you have enough resources? Then do you have the ability to use or sell? Means that this thing, after you complete or after you produce it, can it be sold or can it useful in your company? Is it useful in your company? And then number 5 is, do you have technical support that you can use to finish the product or not? And the last one, can you estimate the cost or not? Okay, so this is the 6 items you need to know when you want to recognize it as a development cost. Okay, look at this. Here, if we recognize a cost as an asset, then it will only occur when there is a probable that, just like what I said just now, future economic, your cost can be ratio realizable. Okay, so let's say this 6, you can only fulfill 4, then we consider as a research cost. If you only can fulfill 5, we consider as a research cost. But if you can fulfill all these 6, we consider as a development cost. So when you consider this as a development cost, you capitalize it. Capitalize it means you add it, or you add it into your intangible asset. Okay, become your fixed asset, capitalize it. Okay, now next, let's look at these examples. Let's say this company, you have a project A, total cost incurred is 280,000. Now the accountant is thinking, should this be my expenses or should this be my intangible asset? So it depends on whether it's a research cost or development cost. So look at here, the expected total cost is 400,000. Yes, to complete this. And expected revenue, so you have future economic benefit, cost you have, you want to complete it. Okay, probably. Now they already placed advance order, so material after seeing. So basically, based on this, you can consider this as a development cost. Okay, the reason here, you have future economic benefits, you already have a reliable cost, and the cost incurred. Therefore the cost incurred here you should consider as a intangible asset. So when you record, you have to record in your statement of financial positions, under intangible asset, you have 280,000. Okay. Now, since this is your intangible asset, so one more thing you need to do is you need to charge amortizations. Okay. So you need to charge amortizations in this case, and also accumulated amortizations. You need to calculate based on the criteria in the questions, but these questions they didn't give, so I'm just giving you an idea. Now look at number 2. The project B, total cost is 150,000. So it's a fast color dye. Total cost to expect to complete is 3 million. Okay. Now you will have a cost saving if you can finish it. Cost saving of 10,000. Okay. Now, although they have demonstrated it's visible and you have intentions to finish it, the completion date is uncertain because external funding. So in this case, you have a problem. You don't know whether you have enough money to finish this project or not. In this case, research or development. So look at here, because of you have not enough, you fail in the ability of adequate resources funding. You have not enough cash to finish up the project, so we consider as a expenses. So charge into your research costs. Okay. Now look at example number 3. Okay, project C, 110K, investment into a new adhesive, new glue in the aerospace. Okay, if this is proved efficient, they will generate a significant income. So if this is the only information, so obviously this is a research cost, means that they are not even have any outcome yet. So in this case, you record under P&L, profit and loss as expenses. Okay, research costs. Are you guys okay? Now, so let's continue. Okay, just now same company. This company have our project A, project B, and also project C from previous example. Just now we know project A is our development cost, project B is our research cost, project C is also our research cost. So in your previous year, you have this development cost and accumulated amortizations. So this is your current year opening. Okay, so how this balance on the research and development costs in previous questions should record in your income statement and also financial position. So now the problem is, how should we record in your income statement and financial positions? So based on this, if you check here, this is your opening. So this is your asset, right? Every year you depreciate over 10 years. So every year you depreciate 1250. Okay, plus your current year, this one also depreciate over 10 years. So your current year expenses will be 125 plus 28 in terms of amortizations. This is amortizations. Okay, and then your current year expenses on research costs will be project B and C. So total your expenses will have 150 plus 10, 110, 260. This is on expenses. Okay, so your income statement should be like this: research costs and also amortizations. Okay, and then in your financial positions, you will have a cost, total asset, in which is 125 from previous year and 280 from current year, plus accumulated amortizations, which is first year amortizations, second year amortizations, plus current year amortizations. Okay, so then you get total net book value. Are you guys okay?